Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's been a lackluster session for bulls and bears both. It's been a frustrating session as well, with the indices flip-flopping between gains and losses. But it seems like bulls are going to have the last laugh as we approach the last half an hour of the trade. We are edging towards a positive close on the market. If you look at the gainers, the banks, basically banks, auto, are the ones that are outperforming at this point of time, while IT and pharma stocks clearly are the ones that have taken a knock today. But I think what bulls are getting a little bit of comfort from is what is happening in the international market, and more particularly what is happening to the US dollar index. The dollar index did weaken a little bit over the past 1.5 hours, and I think that is where a little bit of uptick has come into the market in the past half an hour. Santo, looks like we are going to have another positive close.
Yes, I think as I was mentioning earlier also, the play is now on technicals. Traders are watching the Nifty levels, and any close above 16,300 will be seen very, very positively as a confirmation of the uptrend resuming. In fact, on the previous couple of occasions, you saw that when the market made a certain high, it was unable to get past it, and this time it has managed to reverse that. So that is what is different this time. But again, that said, one needs to see if that can hold at this point in time. And the other good part is that there have been no major earnings disappointment so far, but still it's early days for the earnings season. We are still seeing some bit of minor EPS tweaks, but one thing is there's been a consistent downward revision in price targets for most stocks, if you notice, even though there have not been any major downward revision in EPS. The price corrections clearly have been there. So let's see how it plays out, CJ.
Yes, Santo, I think, with respect to price cuts, I think it is only just analysts being reactionary to what has already transpired in the market, because, of course, analysts don't come out and cut price target every time the stock falls 5 or 10%. So clearly, with the event happening, I think analysts are just catching up with the market. So I would not really read too much into those price target cuts. That said, let's quickly move on to some of the individual stocks that were buzzing in trade today, starting off with Santo.
IRCTC, and CJ, here you will be slightly surprised. I've decided to take a bullish view on IRCTC for a change.
Well, the sun rose in the west today.
No, I think it's the market saying that when the situation changes, probably you need to change your views also. See, the stock has been holding pretty steady now for some time. Between 570 and 600, it's been consistently. So that probably gives an indication that maybe market has priced in most of the negatives, and it's discounting all the possible negative news that had weighed on sentimental not long back. Now, the main triggers probably going forward. One is obviously internet ticketing is set to only grow further. You're seeing the economy reopening. Well, the holiday season is past, but travel is again expected to pick up. Secondly, so I read this report by ULJK Securities now, which says that this executive launches now. IRCTC has about 8 of them in 8 stations, right?
Okay.
So now this is going to be a revenue driver in the days ahead, as most of the waiting rooms are going to get upgraded. So this could be a this could be a stream of licensing.
New income.
They'll collect a licensing free from that. Secondly, IRCTC also has tie-ups with bus services, both private as well as state-owned, and now that is earning close to about 6 lakh rupees per day. Now that's also a very steady stream of income. So these factors considered, I think probably you could see an uptick in the earnings going forward, which then could perhaps drive a re-rating of the stock.
Well, Santo, I think the thing with IRCTC has been is that the fact that the stock price is moving in one direction, the earnings have been moving in another direction. I mean, the March quarter earnings were quite spectacular, and even then you did not see the stock price do much. And I'm pretty sure that the June quarter earnings will also be quite good. That is why I feel that the action on the stock side or the price side is not motivated by what is happening to earnings. It is rather motivated by other factors, such as the possibility or the overhang of a possible government stake sale going ahead. That is something that has been talked about since March. We have not seen anything happen yet, but that is something that is still around the corner for the stock. Apart from that, I think IRCTC's big run from late 2020 till late 2021 was on the basis of it being an internet platform company. I think that is how a lot of investors looked at it. That is why it got the growth multiples or the high PE, that made you skeptical initially. But I feel that to see that sort of a runway again, or to see that sort of a re-rating again, would be very difficult in an environment like this where bond yields are rising. So I just do not feel that the upside is there in the stock. At this point of time, it probably be in a consolidation phase going ahead.
Well, very strange. And I was making the same argument some time back about that, platform and
exactly my point. That is why at that point of time I had also said that if bond deals do turn favorable, and listen, you can take a contrarian bet here. If recession is what you're betting on, then IRCTC probably would be the stock to buy at this point of time. So yeah, I mean, this depends on your risk appetite, whether you have that risk appetite or not. Talking about risk appetite, well, things have not worked out very well for those who were punting on Indus Towers recently. The stock took a beating today. Why it has fallen? The reasons are basically around what can happen for growth going ahead. So for Indus Towers, the upcoming 5G spectrum auction is very crucial because this could revive new capex in the telecom sector and therefore could lead to growth for a telecom equipment company like Indus Towers, right? That said, at this point of time, if you look at the initial, qualifiers for the bids, and if you look at the amount they have deposited for participating in the auction, it doesn't seem like this is going to be a very aggressive spectrum auction this time around, unlike the way we saw during 3G and 4G, right? Analysts have ruled out that there is not going to be any sort of a bidding war because it looks like because of the number of players out there, only 3 telecom operators and Adani Group, which is also not trying to get spectrum for consumer mobility. It seems like there is no need for telecom operators to go outbid themselves. They will probably be getting sufficient amount of spectrum, and therefore the scope for extra large capex from telecoms appears to be very limited. Also, Indus Towers, you remember when the Adani Group news came out that they are going to participate, Indus Towers was one of the big stocks that had moved. It had moved because on the hope that a new player will come in and there will be new capex, you will require more telecom towers, and therefore this could be good for Indus Towers. Now clearly that is not going to happen. If you look at the deposit money that Adani Group has paid out, clearly it does not indicate that they are going for a large amount of spectrum, and therefore would not be getting into or venturing into the consumer mobility space. So things are looking a little sadder than what they were last week when the entire Adani Group news came out, Santo.
Well, that said, big downside, I'm not sure how much, although technically maybe you could see some short-term pressure.
Yeah, I mean, the stock moved up almost 15% on that news, so I would expect at least that to be
on the future side also, there's been some build-up of short positions, so things not looking very pretty for Indus Towers at this point in time. But that said, CJ, there are other factors also which seem to support the stock. One is mainly the big jump in earnings that you saw, more than 50% rise in top line that you saw for FY22. Besides that, there's been an improvement on almost every parameter except, I think, the tenancy and the borrowings, that has risen very sharply in the last couple of years. But if you again look at what analysts have been saying on Indus Towers post its fourth quarter earnings, most of them have cut their earnings. They're neutral on the stock. However, they feel that the fair value, at least the price targets, mostly have been in the range of 250 to 220, even after trimming EPS estimates and everything. So I think probably, the stock could slip back a little in the short term because you're seeing some bit of short positions being built up in the FNO segment, and also the earlier expectation of aggressive bidding in the 5G spectrum, that's not come through. But at the same time, big downsides look very doubtful.
Yeah, I think for a near-term tactical short, I think this is a stock to go with in my opinion.
Well, Just Dial, the next stock on our watch list, the latest set of earnings was slightly ahead of what market had been expecting, and according to according to GM Financial, the cash collection has been up 12.2% quarter on quarter. This despite the company then moving towards a monthly collection system. Also, there's been aggressive addition in its headcount, which is resulted in better paid subscriptions. There's been about addition of about 46,000 subscribers in the last couple of quarters. That said, I think at this point, mostly the play is on the stock being reasonably valued, not so much as a runaway success. Maybe the worst is over. The stock has corrected a fair bit. So you have both Edelweiss and JM upgrading its rating. They have upgraded it. It was a sell rating earlier. They have upgraded it to hold, saying that valuations are quite reasonable at this point in time. So I think, CJ, maybe the stock has bottomed out in the short term.
Now, Santo, you talk about parameters. I think one parameter that stood out for me from the investor presentation that the company had filed is the fact that there has been a stagnation in unique monthly visitor or quarterly visitors to the the app, JD app, basically, that the company launched almost a year or so ago. I think there has been a quarterly stagnation for the past 3 quarters, and that worries me a little bit when you're trying to be a very high growth company. Apart from that, I mean, it's the same argument that I made with IRCTC. JD, Just Dial or JD basically is a platform company at this point of time, right? It is trying to be a super app wherein you can get all sort of services, not only online classified. So for me, at this point of time in this sort of a market, you're not going to get the growth multiples that you're going to enjoy, even if your earnings performance is strong, because investors are just too skeptical. They have already had their fingers burned, so there is no way that we are going to see the sort of multiples that we saw probably a year or so ago. The best bet on Just Dial right now is the fact that you hope that global bond yields come down, government bond yields come down, and then that could change the valuation picture going ahead.
Well, before stocks take off, CJ, they somewhere bottom out, hold steady, so this is probably that phase.
Yeah, I mean, but you can't guarantee how long that phase could be. I mean, it could be an HUL that was bottoming out for 10 years, right? Or there are so many examples out there in the market. That said, one stock that is nowhere near bottoming out and actually heading towards new highs is Polycab India. Blockbuster numbers for the June quarter. I mean, if you look at the Q1 net profit, it soared over 200%. EBITDA was strong, revenue growth was very, very strong. So clearly a very, very good company, gaining a lot of market share, implementing, the new programs that it has been trying to get into. So such as Leap, I mean, it's been in partnership with one of the top 4 consulting firms to enhance efficiencies within the company. And now it seems like, the company is on its way to achieve the target of 20,000 crore sales by FY26. This is clearly one stock that not only retail investors love, but even institutional investors also love Santo, and that is because this is a company that is in a space which is naturally a high margin, high cash generating space, and I think this is one stock that you should have, or at least have a look at.
Well, everything seems to be going Polycab's way at this point in time. Numbers are good, and just one quibble here, that the stock has been consolidating for a while now. For the last more than 4 months, despite the fact that numbers have been showing a steady improvement, stock has been in consolidation mode. Also, there's a huge jump in open interest in the stock, again probably indicating that there could be some short positions being built up, given that the stock was under pressure yesterday. Yesterday is when there was a lot of positions built up in the stock. Today also there's another 11% addition. Maybe only by the end of the day we'll get an idea whether there's been covering of positions. But I'm talking about it more from a technical point at this point, because all the fundamental factors right now seem to be favoring Polycab.
Absolutely, can't see a chink at this point of time in Polycab, fundamentally speaking. But clearly at this point of time, I think a lot of stocks are just moving on the basis of the fundamentals that are coming in, and if you do not have any news flow, they're just lying flat.
Heidelberg Cement, the last stock on our watch list this afternoon. The first quarter numbers again, slightly disappointing there. The company has missed analyst estimates. Operating profit has also been down. Now, volumes are also down. At the same time, the company is trying to, push its improve its realizations, because of which it's willing to take a hit on the overall top line. The bigger worry for the company at the moment is that Central India is the main bastion of this company, and that's where you're going to see capacity addition of close to about 20% between now and FY24, according to ICICI Securities. So that could be the bigger worry. The stock has already corrected quite a bit from its highs, but there could be some more downside left.
Well, Santo, I think, of course, there's been a lot of talk and a lot of concerns about margins of cement companies, given the rise in fuel costs all over across sectors, not only cement. But I just feel that probably this quarter is the worst that you're going to see in terms of fuel costs, because on a sequential basis, clearly you've seen oil prices soften a little bit in the June quarter. There is expectation that oil will probably remain at current levels or go head lower, and probably very less likely that you could see oil going back above $120 or $125 per barrel. So clearly that should provide a lot of relief in terms of sequential margins. Apart from that, I think the second half, there is expectation that second half volumes could recover again, with domestic demand coming into the fore, led by, of course, the government capex. I mean, we have the first half so far, in the first 4 months of the FY23, we have not seen too much capex from the government happening yet. I think probably government will start stepping up its capex programs towards the second half once the monsoon season ends. So I think there should be some bit of optimism that probably the pain on margin side would have bottomed out, and with the company itself focusing on realization, that bodes well, I think, for the future.
Well, a quick look at the market. Indices have managed to hold on to their gains. Sensex is up about 260 odd points.
It's a good. I think we are heading for a very solid close, led of course by the banking index. The Nifty Bank Index is the one that is higher by about 1 percentage point. Mid caps are doing quite well as well, outperforming the benchmark by about 30 basis point. The mid cap index is higher by about 0.8%, as you can see on your screen. The Nifty Small Cap 100 as well. If we can bring that on the screen, I think you can see clearly 1.1% higher. So clearly the risk on trade is back on the Lal Street after a very, very muted opening that we saw. And I think a lot of this has to do with what is also happening globally. The dollar index is clearly topping out. There are a lot of analysts in the US as well, Santo. Technical analysts, I'm not talking about fundamentals here, but technical analysts are talking about the dollar possibly peaking out for the next few years at around that 108 handle, and if it hedges lower, then emerging markets like India could definitely benefit, and probably you will get rid of the rupee at record low headline going ahead. So I think for the sentiment it looks good, but yeah, I mean, we'll have to wait and watch.
It's very strange, CJ, you know, the market just seems to be oblivious of the fact that rupee is under tremendous pressure, not, you know, factoring the kind of pressure that it could have on the macro situation. It just seems to be that everyone is looking at the price. If the price is going up, just, you know, jump onto the bandwagon.
I think, Santo, the fact that the decline has not been rapid and swift, unlike the 2013 episode, is what I think is giving the market confidence.
It's still 7% down.
Yeah, it is still 7% down, but it's still not. The decline has been probably very orderly thanks to the intervention, most likely from the Reserve Bank of India. But I don't think the concerns at the macro level are as huge as probably you saw when the similar sort of situation was happening in 2018 and in 2013. So clearly, the macro faith remains from the market, and on the micro side, earnings are holding up. They have not seen large cuts in earnings, and I think that is why a lot of domestic investors are thinking that I don't really have a reason to panic in this market, even though the market is heading lower.
Well, that said, what do we have on the horizon?
The Santo earnings tomorrow, two big Nifty earnings are going to come out with Wipro and IndusInd Bank. I believe HUL earnings will also come out later, you know, after market close. So clearly, market will also be reacting to those HUL's earnings as well. Apart from that, from the mid-cap space, you will have, Havells India, Gland Pharma, as well as CEAT coming out with their Q1 earnings. So you have to watch out for those earnings as well, especially Havells India. I mean, it's a very important stock in the consumption space.
And the space that CJ tends to like a lot, given that he's been pitching for Polycab
as well,
Voltas
and Polycab.
Yeah.
So clearly, I think we should watch out for those earnings. And apart from that, of course, there is Wipro and IndusInd Bank. And on the economic horizon, in the US, you will have some Fed speakers coming later in the evening to talk about inflation, rate hikes and whatnot. ECB, there has already been news breaking out from Bloomberg that ECB might consider a 25 to 50 basis point hike on Thursday. So let's see how the macro side develops for tomorrow's trade.
Well, with that, it's a wrap on Market with Santo and CJ. Thank you so much for watching, and do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow at 9 a.m.